Okay, so today's video is going to be on how to use Section 105 medical reimbursement plans to reduce your tax bill at the end of the year. Now, chances are you're probably already deducting the premiums that you're paying for your own health care through your business. And if you have employees, you're probably deducting the amount that you're paying on their behalf as well. But most business owners, when it comes to their out-of-pocket cost, they use taxable dollars for that. Now, medical care is deductible, but it's subject to the 10% adjusted gross income floor. So that means that anything up to 10% of your adjusted gross income, you can't deduct. Anything above that, you can. So today's video, we're going to show you how to use a Section 105 medical reimbursement plan to where you can deduct everything not subject to that 10% AGI floor. Okay, so the deal with Section 105 plans is that rather than offering group coverage, where your eligible employees can enroll in your plan if they choose, and then you pay for all or a portion of their premium cost, deductible of course, you're giving your employees, your eligible employees, an annual allowance to go out there and find coverage on their own, either through the exchanges or through private companies. They then submit the expenses to you or the plan administrator as they're incurred, and they get reimbursed for them throughout the year up to an annual limit that you set. Now, there are some Section 105 plans that combine the group health with the concept of reimbursement, but the tax strategy that we're talking about today does not. Okay, so here's how it works. Typically, you're probably already deducting the premiums for your own health coverage, either through the group plan, through the business, or otherwise. But you're probably not deducting your out-of-pocket costs unless, of course, they exceed 10% of your adjusted gross income. Now, with the Section 105 plan, as the owner of the business, as the employer, you're actually not allowed to participate in the tax-deductible reimbursement. But your spouse can if they come to work for you. And the way it would work is you can set that annual reimbursement limit at whatever your family's typical annual out-of-pocket medical costs are. Now, you'd have to go get coverage, of course, and you also, because it's a qualified plan, cannot discriminate between your spouse if they come to work for you and other employees. You have to offer them the same annual reimbursement limit for everybody. So if you move forward in hiring your spouse solely for the purpose of using a Section 105 plan, it's really, really important that their employment is legitimate. This is an area that the IRS scrutinizes quite a bit. So you can't have somebody come in and file papers for 2 hours a month and pay them $75,000 a year. It doesn't work like that. Their employment needs to be bona fide and their compensation commensurate with what they're doing for you and for the business. And now they can be compensated through wages and or reimbursement benefits through the plan, which is great, but you need to keep records to make sure that you can prove to the IRS that what they're doing is legitimate. The way that you do that is make sure that you have a real employment agreement with the compensation arrangement. You keep all the tax forms and everything that you would normally keep for an employee on file, like an I-9, W-4, W-2s, any other state and federal tax forms. You need to keep records of that in case the IRS comes knocking. So long story short, Section 105 plans can be a great way to reduce your tax bill at the end of the year because you're allowed to deduct all your expenses, not just the premiums of your healthcare costs. You can deduct your out-of-pocket costs too, but there's a lot of ins and outs to it, so it's important to work with the plan administrator who knows what they're doing. Because if something is done incorrectly, you're at risk of being fined and penalized. If you haven't done so already, be sure to check out our short video series on 3 easy ways business owners can reduce taxes. Just click this link to watch.